Did you know that Government of India has actually increased the rates of government bonds of India twice in 2 months by 90 basis points. If you invest 15 lakhs in this investment instrument, you can actually get a monthly pension of 9,250. When compared with savings account and post office monthly scheme, these investment instruments get more yield. Hello and welcome back to Freedom English channel. This is Sanara. Today in this video, we are going to see 6 investment instruments which will give you a regular income when you retire in life. Is it important to plan our retirement? I would say yes, it is, because most of us do not give that importance to retirement. But what if we are alive tomorrow and we need money and there is no one who can actually provide that for us? We should be the ones who plan our retirement so that we can stand in our own legs till then. So before I jump into the video, if you have not subscribed to our channel, go ahead, subscribe our channel and click the bell icon. Sixth one, immediate annuity plans of insurance company. So insurance companies provide this product. What do? When we opt for this, we will deposit a lump sum amount and we'll tell them we need the pension whether monthly, quarterly, half yearly or annually. But always remember, there is a GST charged here on the purchase price and that is 1.8%. So now using a table, we are going to understand how much these annuity would yield us. Yields on immediate annuity schemes. So in the first column, we are going to see the provider's name. On the second column, it's going to be annuity till 2050. And third column is going to be annuity till 2023. HDFC Life, 6.50% till 2050 and 6.30% till 2033. SBI Life, 5.40% till 2050 and 5.20% till 2033. Tata AI, 6.10% till 2050 and 6.30% till 2033. ICICI Prudential, 5.96% till 2050 and 5.81% till 2033. And Bajaj Allianz, 5.76% till 2050 and 5.60% till 2033. So you get an assured fixed income or pension from this investment instrument, and in case if something happens to you, your principal amount or the purchase price will be given to the nominee. So this amount which you get as interest is completely taxable. Fifth option, fixed deposits of AAA rated NBFCs. So RBI provided rate hikes. So the non-banking financial companies also increased the interests which they were paying on the deposits which we deposit there. So according to the tenure, there has been a variation. First, let us understand how the variations are by using a table. Bajaj Finance, 44 months tenure, 7.60% interest rate. Bajaj Finance, if it is going to be 36 months tenure, 7.45% interest rate. Mahindra & Mahindra Financial Services, 60 months tenure, 7.25%. ICICI Home Finance, 65 months tenure, 7.25%. So these are the NBFC fixed deposits for senior citizens. So all of these deposits, they have AAA credit rating. So your principal and your interest is completely safe and you will get paid. But this is not a bank, so amount is not insured. So if something happens inside these NBFCs and they are unable to pay it, it might be a little bit of a risk. You can opt for a monthly, quarterly or half yearly payouts of the interest. But remember, the interest rates will be a little lower. And speaking about the tax part, it is taxable under the applicable tax slab. Fourth one, RBI floating rate savings bond. Let us see how it works by using a table. Maximum amount which you can deposit in this, it has no limits. Your interest payouts are done half yearly. The interest rate, how it is calculated is according to the NSC, which is the National Savings Certificate, plus an addition of 0.35%. So currently, NSE offers 6.8% per annum. So in total, it will be 7.15% interest rate. Taxability, according to the applicable tax slab, we will be taxed. And speaking about the premature withdrawal, it is allowed for the senior citizens under few conditions. So interest rate is paid twice a year, which is in January and in July. It has a tenure of 7 years. And senior citizens and non-senior citizens can buy these bonds. You can apply for these bonds in several banks, which include SBI, Bank of Baroda, HDFC, ICICI and Axis Bank. and you can also buy these bonds in RBI direct retail platform. Third option is Pradhan Mantri Vaya Vandana Yojana. In 2020, along with LISC, Government of India brought in this policy for the people who are 60 and 60 years above. In this, you deposit an amount and you get a pension out of it. So if you deposit a maximum of 15 lakh, you get a monthly pension of 9,250. So this gives an interest rate of about 7.4% per annum currently. So in this table, the first column denotes the mode of pension payment, which means do you want your pension to be paid monthly, quarterly, half-yearly or yearly? And then we are going to speak about the minimum purchase price, followed by minimum pension, followed by maximum purchase price and maximum pension. So monthly, your minimum purchase price would be 1,62,162. Minimum pension is 1,000. Maximum purchase price is 15 lakhs. So your maximum pension monthly is 9,250. Speaking about quarterly, minimum purchase price 1,61,074. Minimum pension is 3,000. Maximum purchase price is 14,89,933 and your maximum pension is 27,750. And speaking about half yearly, 1,59,574. Your minimum pension half yearly would be 6,000. Your maximum purchase price is 14,76,064. Your maximum pension half yearly will be 55,500. And speaking about yearly, minimum price purchase is 1,56,658. Your minimum pension yearly would be 12,000. Your maximum pension will be 1,11,000 yearly. The interest rates applicable for each payouts, it increases marginally. So with a small table, let us quickly understand how it increases. Monthly 7.4%, quarterly 7.45%, half yearly 7.52% and yearly 7.66%. The investment is for 10 years. Once the 10 years is done, you get the purchase price back. And in case if there is an unfortunate event, then the nominee will get the amount. Tax, is it taxable? It is taxable under the applicable tax slab. And there is no tax deductions or tax benefits in this investment instrument. And in case if you're applying to prematurely close it, you can actually do it to treat your illness or maybe your spouse's illness. But remember, the surrender value is set at 98% of the purchase value. Second option is Senior Citizen Savings Scheme. This is backed by government. Risks none. And you get guaranteed returns. The interest rate is paid every quarter and government also revises the interest rate every quarter. But now for past 2 years, it has been the same, which is 7.4%. You can open your Senior Citizen Savings Scheme in a post office or selected banks. The banks include ICICI, State Bank of India and Bank of Baroda. If you want to open your Senior Citizen Savings Scheme, you need to be physically present there because you cannot open these accounts through online. So now, with the help of a table, let us understand how Senior Citizen Savings Scheme works. Maximum amount allowed is 15 lakh. Current interest rate is 7.40%. Interest reset frequency, which means that revision of interest happens every quarterly. Interest payout, which means you are paid the interest every quarterly. Period of investment is 5 years, but if you want to extend, you can extend it up to 3 more years. Premature withdrawal is allowed with penalties and risks. There is no risks involved because it is guaranteed by the government and taxation happens according to your tax slab. Only senior citizens can opt for this scheme. But there are 2 other categories, which includes people who are 55 years above and 60 years below. And people who have a defense background, who have given the voluntary retirement maybe, whose age is 50 years above and 60 years below. So the last 2 categories, which means the ones I mentioned right now, they have to provide the voluntary retirement certificate and they have to invest in this within 1 month ever since they have received the proceedings from their retirement. If you invest the maximum of 15 lakh in Senior Citizen Savings Scheme, you will get a pension of 27,750 quarterly with an interest rate of 7.4%. And in which month do you get these? You get this in January, April, July and October. And the tenure is 5 years. If you wish to extend, you can extend it for 3 more years. Investments up to 1.5 lakh has tax deductions under Section 80C of Income Tax Act. And if you plan to withdraw your amount within 1 year of opening it, you will not be paid the interest. And if you're planning to do it from 1 year to 2 years, 1.5% of the principal amount will be deducted and the rest will be paid. And if it is between 2 years to 5 years, 1% of the principal amount will be deducted and the rest will be paid. The last and the first option which I would like to present here is government bonds of India. So let us understand government bonds of India first by using a small table. Maximum amount which you can deposit here has no limits. Interest payouts is done half yearly. Taxability of interest is taxed according to the applicable tax slab. Risks, it has no credit risk, but the yields completely depend on the original price or the purchase price of the bonds. No risk if you have held it till the maturity. Speaking about the liquidity, it is fairly good because you can buy and sell these in the RBI retail direct or other demat accounts. This is one of the safest instruments, and the interest which we get out of it can be calculated or can be utilized as the pension which we are receiving in the old age. And here I need to mention something. In a year or so, due to inflation, RBI has increased the rates twice in 2 months by 90 cumulative basis points. These yields are higher than the other regular income options. But you have to remember, these yields fluctuate every day. And since they pay out the interest every 6 months, it can actually work as a pension for the retirees. And there are 3 things which you should know about government bonds of India, which is number 1, coupon rates are different and yields are different. Second one, your yields depends on how much you paid at the time of the purchase. And third point, if you hold on to the bonds till maturity, the risk is very low. In case if you're planning to sell them in between, you can actually do it, but you might sell it for a lesser rate. The interest payouts are taxed according to the tax slab, and if you want to buy these bonds, you can actually do it by submitting your PAN number and completing your KYC in RBI Retail Direct platform. So I finished my video with this point. So remember, any time in life, you should always have your own money and you should stand in your own leg. So if you have not planned about your retirement till now, I believe this video would have given you a small spark to think about it. Think about it, opt the right option for you, and let your life be happy, peaceful, and financially independent always. So with this note, I end my video, and in case if you have not subscribed to our channel, go ahead, subscribe our channel. And if Freedom app is not there in your phone, I would request you to go ahead, install it now and register yourself. If you ask me why, there are so many questions that raise in our mind when it comes to starting a business or maybe about personal finance. You love farming, but you get stuck because you don't have much knowledge about it. You will be having an eye-opener or a guide in the Freedom app. So what are you waiting for? Go ahead, get the guide into your life, understand what these mentors are saying, and implement it in your life and change your life. And with this point, my video comes to an end. I'll catch you again in the next. Until then, you guys take care and bye-bye.